Let me bring you over to one of our charts, which is basically Atlanta GDP. Now forecasts have been revised upwards, but economists are predicting a weak quarterly result. When you look at some of the numbers coming out of the U.S., do you ignore the inverted yield curve and focus on the kinds of eco figures?
I would do, yes. I think, just as Sonia was saying, I think we're in potentially quite a sweet spot for markets. And, in our house view, we've gone overweight equities again quite recently. And one of the reasons for that is that we think we're at a turning point in the global cycle. We're seeing that in an upward trajectory in cyclical indicators, not just in the US, but in Asia and Europe as well, at much the same time as we've seen both the Fed and the ECB pivot in a more dovish direction. So we're in an environment where over the next 6 to 9 months, we should see cyclical data get stronger, but not face the offsetting headwinds from, I guess, a more hawkish set of central banks. But I think as we move right towards the end of this year, then that's probably the key testing point when we could be seeing much stronger economic data. And the question then is, does the Fed, does the ECB move in a more hawkish direction, or do they maintain their very easy policy for then?